G'day everyone, welcome back to Pete's Investing. Today's June the 9th, 2023. This is the Nat Gas price update. On our weekly, we're still in a bearish bias, but on the daily we broke up into a neutral bias after being bearish for a couple of days. And on the hourly, we've got a slight divergence happening, and I'll talk about that in a minute. First off, if you're new to the channel, on the weekly we look at the triple moving average of the price chart, and we compare that to the moving average of the CCI 150, and if they're both aligned, it's giving us a signal bearish or bullish, and at the moment it's bearish. So predominantly bearish trades, as you can see. Since that decline during those weeks, you would have been going short only. On the daily, we've got a few things here. We've still got this bullish divergence playing out on the daily against this bearish divergence on the price chart. So what we're looking at here is, as long as it remains above this key support area at 2158, and this CCI keeps moving to the upside in line with this this diverging trend line, then we should see it break above this resistance at 2786, and our initial target will be this triangular or rectangular box up here between the 23% and the 38%, which is 32.54 and 39.65 range on the upside. Now, if it breaks below this support area and it goes to the downside, then we're going to see further declines, and our short target will be this 23% to the 38% on the downside, which is 19.16 to 12.10. So it's been stuck in this range for a number of months now. So if it breaks either way, they're our long and short targets on the daily. Again, for this CCI to work, we need this divergence to work on the CCI. We need to see the CCI continue to the upside and the price break to the upside. Otherwise, the CCI to break to the downside, in which case the price will also collapse to the downside. So that's why it's giving us this neutral bias at the moment. On the hourly, if we zoom into this closer time period, you can see there between that resistance and that support level there, we've also got this minor resistance forming at 24.23, and it's currently bounced off that. But more specifically, we've also got this divergence happening down here. So you can see there that CCI is moving up, and that's continuing to move up, whereas the price chart from that same level was declining. So you can see there the CCI is still moving to the upside, and this is separate to the daily CCI, by the way, the daily divergence. So this on the hourly is still moving to the upside on the CCI, and the price is broken up past that trend line. So if we pull that trend line down there, that's where you would have entered long, and our initial target would have been the closest Fibonacci range. So if we draw a Fibonacci range from that recent high to that low, you can see that it's broken up there, and our initial target would have been, if I draw another rectangle, would have been the 38% to the 50% level. And you can see there, had you placed an entry there, it would have hit your target there initially. Our secondary target, if it goes higher, again we're not comparing the daily at this point, we're looking at this minor range here. Our next level, should it break above that area there, will be the 50% to the 61%, which is the 24.77 to the 25.49 level. That'll be our secondary target. Now, as I say, if it breaks above the 61%, that's going to be a key area. So if it breaks above that, then we're going to look at potentially higher movement, a bullish movement, and potentially breaking this key resistance, as I said, on the daily, and that'll then start enacting on our daily target, which is that level there, as I said on a daily time frame. So at the moment, we're still stuck in this little range. Again, it could break to the downside. There's no guarantee it's going to continue up. It could break to the downside, and that's always a challenge should it break below this support level. Or if it breaks above these levels, then we're going to see higher positioning, and especially if it breaks above the 61%. Also, just zooming out on the hourly, you can see there, this is a long back test versus a short back test. And the way to trade that would be using the same methodology, as I said, trading with the CCI and the moving averages of the price chart. So again, you only trade long when the price on the weekly is showing long positioning, and likewise on the daily during that same period So just refocus that. So during that same period, you would have traded during those long periods which align with the weekly. That's where you would have taken those long trades and predominantly short trades during the weekly. You can see there on the weekly short trades primarily, and on a daily short trades primarily, and that would have been your weekly trades there. So that's giving you some level of confidence and better probability of success. You can trade on the daily alone and matching that against the hourly, but again, just to be a bit more confident, you can bring in the weekly trends as well. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page. We also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.